Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading. It is December 8th, Wednesday, December 8th. And actually, a quick intro. I'm Todd Rich. I'm with Nadex. With me from Keep Trading Simple, Brian Caprice. It's always usually a good idea. Before Brian and I jump into it, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. What are we looking at today? One, equities are opening slightly in the green, extending a little bit of the rally from the last couple days. I think we will jump over to the charts, though, because the charts are showing something slightly different, or at least interesting to look at, and certainly some things to think about, which we might see a little bit of profit taking after anyone who bought the dip in the last couple days. But we'll take a look quickly over at equities, and then we're going to jump into what's going on today. We do have the Bank of Canada at 10 a.m. Eastern, 9 a.m. Central. Now, don't expect their interest rates to change at all, but they are going to lay out their policy going forward. We could see some action in the US dollar, Canadian dollar Forex pair. We also have at 30 minutes later, as they're laying out their policy, we are going to get the oil inventory reports. Whenever we're talking about the Canadian dollar, always or usually good to also take a look at what's going on in oil. So oil inventory in the United States, that can certainly impact what's going on with the price of oil, and that certainly could impact the Canadian dollar, US dollar FX pair. So we'll do a quick little look at equities. We'll jump into what's going on in Canada and oil. And if we've got time, we'll take a peek because we've been seeing the euro get some strength, and want to take a peek at what's going on over there. So there's a little bit of FX in there today. So with that, Brian, let me flip it over to you, and let's start with, I guess we could just do equities quickly, and then let's get into the Canada oil setups for today.
Yeah, I would say right now, the equities are somewhat slow today. There's really not a lot of news US based today. The only thing that you're hearing on the news thus far is Pfizer's comments. Pfizer always has to be the first one to make comments.
Of course.
And they're, they were like, oh, Moderna's, 95, we're 96. And then it turned out that, now in head-to-head studies, they're not as high as Moderna. So, a lot of the numbers that people, pharmaceutical companies use, you got to take all of them with a grain of salt. A lot of them are not head-to-head studies. There are now, studies out there that are showing it, but Pfizer is purely a marketing-based company. They will always be the first ones with a big blockbuster headline. This is what people are going to be talking about today, and this is, and I'm kind of showing you, this is what they're talking about, and this is what's driving the green. But don't be surprised if they roll and flip today. It's great, Pfizer saying, hey, 3 doses neutralizes Omicron, but then a couple breaths later, they're saying, but we're working on a specific vaccine just for Omicron later, but it neutralized it. Why would you need a separate vaccine? So it just shows you it's kind of a...
That would be for people who don't have the vaccine, but they're not going to get it anyway at this point. So I agree with you on that.
Yeah, and in 3 months, we're probably not going to have Omicron. We're going to have something else anyway. So you're always playing catch up in this sense. But the reason why, I wanted to bring it up was just because when we saw the European movement, right?
Yeah.
We're going to kind of follow theirs. We didn't see a lot of European-based movement besides the euro dollar itself. Everything coming out of right now, again, this is talking about, the European Central Bank Governing Council. They're talking about, we're staying on path. We're doing what we had planned. Nothing is changing. Our bond buying is ending in March. Again, they're doing the OMA what? They don't care. They're like, we don't know how it's going to affect it, but right now, we're following the path. They have seen nothing that has shown that it's going to deviate from where they're going. Lagarde also basically said the same thing. We know what our risks are, but we're progressing in the avenue and the path that we've laid out. Obviously, there's risks in the unknown, but we can't
stay the course.
For the unknown.
Yeah, stay the course.
So all of this is, again, remember, all the markets crashed because Omicron was supposedly, the end. Now it's turning out to be nothing. The European Union was like, we don't care. We're going. And because of it, the European markets, euro dollar up big, euro pound up 66 is big, euro yen is also up big for the day. So they're all moving in the right direction. And how it relates back to the indices is, it's always great to see that positive kind of push forward. And again, going to look at the volatility index first, you can see we're hovering. We talked yesterday. It's not really like a buying, it's not really a supply and demand thing, but is an area where really people stepped in at 21, and it's down slightly, but the last 2 days it's been down like 12%. Today it's down just a smidge. And if you're looking at all the indices, even with the European market going forward, I mean, they're not concerned about Omicron. You can see that, 0.15, 0.05, 0.16, Russell up a little bit, but I think some of these are misleading as well because, this is what we saw yesterday. If you attended the session, we talked about how there was many call spreads yesterday in the first 2 hours, and then look what it's done since that time. Really nothing, right?
Yeah.
But, NQ kind of the same thing. And we just talked about NQ yesterday. On a 4-hour basis, you can see it's more of a cliff, but yesterday we talked about it. The last time prices were up at 16,400. We had major selling. We hit it again. We had major selling. We just hit it again and kind of touched it again. It's already starting to roll back down again. This is a 30-minute chart, but we got to find some buyers. That's a little bit farther down here. Wait a second. Why is it going down? I mean, Pfizer just cured COVID. No, it's called profit taking. It's called profit taking, guys.
By the way, on a 15-minute chart, it's doing the exact same thing. So
yeah. I mean, here's a 4-hour chart. We don't really technically use 4-hour too often, but it gives you a much broader picture. Look at this. This is a parabolic move up when Omicron was suddenly nothing, and now we're bouncing off an area where we've seen sellers in the past. So it's not crystal ball trading. All it is looking at these and saying, hey, listen, 4-hour wise, yeah, we just took a roll. And look, it's been 3 days of straight down from that zone, or 12 hours, sorry, not 3 days. Same thing here. Same thing with the Russell. So the Russell is technically the one that is up the most right now. And really looking at it, you can say, is it up huge right now? No, not really. And what is it doing? Here's an area right here on the 15-minute, that 2275 kind of psychological level that it's not only bounced off of once, it's bounced off of again. And you can see it had a little bit of a burst, and that burst came in right at that 5:30 time frame, that European reversal time. But if it starts to fall, if it's unable to really get any more traction forward, again, we're looking at this one potentially coming all the way back down to this level. Now, we've painted much more of a red picture. That's where the negativity starts on the day. And inflation will start creeping back in. That will be the new story. So, like I said,
Omicron is the story, by the way. I think inflation, while we've got Omicron, I think that's sort of running its course. I think you're seeing a little bit of profit taking right now.
Yeah.
Equities are just shy of their all-time highs for all the indices. And it's kind of logical that you would see some profit taking for people who bought the dip and said, thank you very much. Want to move on to the next trade. We're not sure where this is going to go from here, but it appears Omicron's becoming less and less of a concern. And now it's all going to be about, which is I think where we really need to go, is the inflation story. We know what they're doing in Europe. Let's see. I mean, let's talk about Canada, Canadian dollar, and then oil, because I think that's going to be really interesting for today.
Yeah, it's a double whammy for today. It's been a trade that we've been talking about all week. We started talking about at the end of last week about, how oil just got absolutely beat up, and now it's, it's grinding forward again. It took a little bit of a hiccup this morning at 5 and then immediately rallied back up again. We know it's inventory today. So right now, inventory-wise, you can see yesterday, the forecast was there was going to be a surplus of 2 million barrels. There was a down draw of 3 million barrels. So that's a $5 million, or $5 million swing the wrong, bad for oil, technically, right? So, as of today, they're expecting there to be a 1.5 down, reduction. Even if it comes in as 3, that's still twice as bad. So these are all things that are technically good for oil, right? Good for oil pricing. There is a level above, and this is a level that we can refine just a little bit. We can probably bring it up to there to get a little bit better of a grasp, although it's not my favorite of levels. The way that it was formed with the candles pushing up, pushed it like in the top 90%. So it's one we got to mention, but it's not one that I'm absolutely sold onto or I love it. But you're talking right around that 73.70 to 74.30 range, that little 50-cent range around $74. We're well within range. Remember, the European session is not really the one that's known for driving oil prices. It's the U.S.-based session. So quite a volatile, if we mark it off at 3, there would be our low. There's where we are right now. That's kind of on the bigger side for oil, right? You see these littles, that's kind of a big move. And all it was a spike down, spike back up, and it's still progressing towards the top side. So overall, I think they're expecting a down draw in the surplus today. So I think it's something we need to watch out for. But what it does is it opens up us for the dollar CAD. Now, the dollar CAD, we've been talking about now for almost a week now. Remember, this is a weekly call spread. Okay, this is something you could have put on Sunday night when the price was over here. We're almost at the end. It's so close. It's right there. It just needs to drop just a little bit further down to what, 59 or 50, 25, 90, 90-ish range. We're so close. Now,
Oh,
I
yeah,
think
well,
this is important.
even then, at this point, if you had put that on, you probably would be out of it by now.
Maybe. I mean, we're like, the whole thing is 250. We're at 235 right now.
Yeah, I mean,
So
yeah, well, I mean, what more are you looking for for it to go? 'Cause it's not a
set and
knockout.
forget. Yeah, set and forget. Well, and it's nice that you brought up knockouts. We now have 4 knockouts broken out. Our 4 knockouts have been broken, knocked out on the way down so far today, or as
Yeah,
of Wednesday. So they've reprinted all of them. Again, all 4 of the originals have been knocked out to the downside. So again, call spread, knockout, whatever your pick is. Every single one of them has been great to the downside. So I would say right now, kind of the double witching is we do have the overnight rate at 10 o'clock this morning. It's kind of near reversal time, but they're not changing the interest rates, but they are saying, what are we mapping out? How aggressive we're going to be? How many times are we raising? How are we going to rein in inflation? They might as well just raise the interest rate. All of those things will be very bullish today for the Canadian currency. And what that's going to do is not only if there's a surplus in oil, will oil stimulate the CAD in a positive way, but any of those mentions of this is how fast we're going to do it, this is how aggressive we're going to be, all of those are great because again, it will make the Canadian currency more in demand. Um, there are some levels below that I think we need to watch out for. I would say I don't think this is going all the way back down to 20. It's not one of the 120. I would say we're probably going to start running the issue around that 125 mark. And there's 2 little small areas. Let me bring it up to a 4 hour so you guys can see it real fast. In looking at these, you can see that there was a nice pop right here. There's a small level at 125.92. That's probably where we're going to take a small bounce off of it, but I could see it being a bounce and then kind of just a quick little hop down. I think 2 levels. One is the red candle here at 125.7 we need to watch out for. And then there was a bunch of buyers that stepped in around 125.46. So I would say we probably still have a bit more room to run in this one to the downside. I will say there is probably, at this point, as Todd mentioned, this is a lot of movement in one direction. There's probably some more in there that we need to kind of watch out for. And remember, on a larger time frame, and I'm scrolling it out. I know there's a lot in here because we do these on a smaller level. But if
right.
you draw fibs from low to high, that 50% mark also
Yeah.
just happens to coincide with the dotted lines, which are right at that 125.72. So I would say right now there's probably room for about another 50 pips to the downside in the dollar CAD. That is a probable kind of reversal area. And again, this is a very large area here, but remember, these larger time frame swing traders will use the 50 for a lot of things and then use the 61.8 as a backup for it. In drawing different zones, I would say that there's a zone lower right on the 61.8, as well as if we use this entire area right here, it's also sitting right at the 50. So you can see 50, 61.8.
There's some support down below there. And for
there's
those
some areas where we have bounces coming up.
And for those who, I mean, I know we have a bunch of people who've joined this morning because they caught the boot camp yesterday, and this might be their first time this morning. And if you're not familiar with FX pairs, remember the Canadian dollar is in the second position here. So as this chart goes lower, that is Canadian dollar strength, and that's what we're seeing.
Yeah.
We're seeing oil go higher. That's going to help Canada. We see we get some information on what Canada is going to do around their interest rate policy. If they're going to be raising interest rates, it's going to give strength to the Canadian dollar. So that's why we're watching this chart to the downside. That's just
we're seeing
Canadian dollar strength.
Yeah. So, and it's a combination. We're seeing dollar weakness as well. We have lower highs and we have lower lows inside of the dollar index today. With a weaker dollar, a potentially stronger, obviously Canadian policy, stronger oil prices, all of these lead the dollar CAD into a downside position. Again, we've been there for 2 or 3 days. And again, energies, like I said, oil is continuing with, put it back on the third. Oil is rallying up again.
Let's look at oil because we do have those oil inventories.
Yeah.
And if you're, you know what, let me get the
oil's rallying, and natural gas too. Natural gas is up 5.7%.
Did you see why nat gas is up? I don't know if you caught the story. It's up
I saw
in
my
Europe.
weather outside today. It's my weather. Because it's going to snow. There's a 70% chance of snow in Maryland today. That's why it's up today.
Yeah. Meanwhile, it's really cold here in Chicago. No, it's their concerns in Europe on natural gas if Russia were to invade Ukraine, it would potentially shut down a major pipeline. So,
Yeah.
it's contagion on the price of nat gas if
Well,
there
it'll be
is.
all energies. Yeah, it'll be all energies. Remember, Europe isn't driven on oil the same way we are. Their big eye is natural gas. Now, could the United States help supply that? Sure. Is it easiest to come from Russia because it's closer? It's a land. Yeah, absolutely. But it's the same thing. If Russia does invade, Biden promised strong economic threats, is what he promised. But in the reality is it's going to jack commodities up all over the place. Why? Because again, Russia is one of the biggest speaking voices inside of OPEC Plus. If we put economic sanctions, it means we can't buy oil from them. It's how it'll work out, which means we need to rely upon domestic, which means we need to ramp it up here, which the United States would gladly do that. Natural gas, we could absolutely start shipping natural gas overseas. We have the ability to do it. It's us versus Russia in the natural gas war, but it is also going to jack natural gas prices up. So it's kind of it's really in Russia's it's in their court what they decide to do with it. But again, this is why they keep talking about alternative sources of energy. Relying upon specific countries is not diversification, and that's why again there's contagion with it. So
Yeah. Now, I did drop a link into the chat, which is the economic calendar over at Daily FX, and this is at 10:30 this morning. We do have these oil inventory reports. We're going. It's the stocks change. We're going to see how much the oil inventory has changed in the U.S. Are we adding supply? Are we depleting supply? The forecast is that we're going to be adding just over 1.5 million barrels. We'll see where that comes in. But
I have down draw right now. I have down draw of 1.5 million barrels. Is what I'm seeing. You seeing a surplus?
um, oi, so hold on. What do you have? Let me see what you've got. Do we
I
have
have down
differing
draw.
forecasts?
Yeah, I have down draw.
Oh, that's
Down draw of
interesting.
1.5 is what I see, and then again, API had a positive 2.0. So I don't know.
Right.
Maybe the little primate with the dart at Forex Factory is a little bit off today.
Or it could be either one of them. There could be
Could be.
a minus. Well, in either case, we could see when these inventories come out, you could see some action
Mm,
and some volatility in oil. In which case, those short duration binary options,
yeah.
something to be taking a look at. Uh, and there will be some hourly ones that are available for you to take a peek at.
Yeah,
Um,
I would say, guys, remember, don't forget the 35 and 1 strategy. Go look at that. The way that we're bouncing off this top level right now, there could be some great action on those smaller time frames at 10 o'clock. Dive in and see if we've been able to break this and see if there's any new levels of basing. This will be a little bit of a support and resistance trap for people that are trying to, it broke above. Yeah, there's a trap right there. So again, 35 and 1, look for basing, look for stabilization in price. And again, I'm going to pitch it. Don't forget to look at those call spreads because a lot of times the oil binaries are expensive. An out of the money call spread could be really nice, and again, it doesn't have the whipsaw, exposure like a knockout would. So, and you can
right.
get them on short duration.
So definitely, and you can take a look at those as well. That's a good point. Those short duration call spreads, because the binary options are in the end they're all or nothing. Where those
Mm-hmm.
call spreads, they're variable payout based upon where you trade them in the premium. All
Mm-hmm.
right, with that, if you've got any questions for Nadex, please email us customerservice@nadex.com, whether it's about our products, the platform, uh, anything, your account, anything we could be doing to help you. We want to see you be successful, and any way we can do that is uh, if you ask for help, we'll try to provide it. Brian is also very accessible. If you've got questions for Brian, please feel free to email him, support@keeptradingsimple.com. It's great that Brian makes himself available as a resource. What did we talk about today? I mean, there is some things interesting going on in the market. The 2-day rally with equities. Uh, after I like Brian's term, the OMA what? Yeah, Omicron is starting to turn into a bit of a nothing, and there was a very severe overreaction to the downside. We've rallied back, equities getting back toward all-time highs, not quite there, but you might see a little bit of a rollover as people do a little bit of profit taking on anyone who bought the dip and took the ride back. We've got Bank of Canada, who's going to be their interest rate decision. While we don't expect them to change any interest rates, we do want to hear what their policy is going forward. But we expect to see that give strength to the Canadian dollar. We've got oil inventories in the U.S., and depending upon what the price of oil does there, that could either help. If oil goes higher, that'll just give additional strength to the Canadian dollar.
Stacking the odds in your favor.
Yeah, and there we have it. So with that, Brian and I will be back again tomorrow morning. Want to thank everyone for joining us, and good luck in the markets, everyone.